Good evening, everybody. Good evening. How's everybody on tonight? Come on in tonight. Come on in. And we're going to have a good time on the night. We're going to shift some things we normally do that I normally do on Tuesday night. But I got some wonderful guests that's going to be joining me on tonight. We have a wonderful presentation. I need you all to come on in. And I need you all to share. Take an opportunity. Go to that share page. You all that's watching us on the website. Call somebody. Tell them to join me on the website, citadelofpraise.org. You all on Facebook, y'all already know what to do. That button right there in that corner. Y'all know where it is. That button right there on that corner. Share on tonight. I know we're a little late. I know y'all been wondering, where is Spencer Ellis? Where's Pastor? What's up tonight? He must have fell asleep. He must be out doing something. No, we were getting some technical things together so we could prepare to give you all some great information and to have a great presentation. Again, as I said, please share this. Call somebody you know that's always borrowing money for you. Call that cousin. Call that brother, sister that's always borrowing money. Amen. Tonight we're going to be talking about credit and banking 101. I got some wonderful guests that's going to be joining me from Comerica Bank. And I thank God the Citadel and our Citadel Community Development Corporation. We often do a lot of partnership in partnership with Comerica Bank. Comerica Bank, amen, one of our great banks here in the city and all across the United States of America. So we're going to get started. I know I'm getting half hour late, letting people come on in and join and get your questions ready. You have banking questions. If you have credit report questions, and we might even shift gears a little bit. You got loan questions. I don't know. You're trying to get a mortgage, trying to get a car loan, and you want to know what Comerica Bank can do for you or what the procedure is, or how come you keep getting turned down. They might be able to help you with that on tonight. And again, thank you for sharing. And we're going to get started because we're already late. We're going to get started. I have some wonderful individuals that I'm going to bring on, and I'm really going to let them introduce themselves, and I'm going to let them tell us what they do at Comerica Bank, how long they've been at Comerica Bank, give us some directions on where we're heading on tonight. And let's get ready to have a good time. Tonight, understanding credit and understanding banking 101. If you just happen to be out there surfing the internet, surfing YouTube, surfing Facebook, you are in the right place on this evening. In the right place on this evening. So let's get ready to get started. So let me add some people to my stream here tonight. I have Miss Bianca, and she is just so, I can tell a lot of stories about how she's a blessing to us at Citadel of Praise and even to our Citadel CDC. And I'm honored to have Mr. Michael Cheatham and Miss Bianca. I guess I will start with you because I don't have a proper introduction. So I want the people that's viewing us on tonight to tell them and let us know what you do at Comerica, how long you've been there, whatever you want to share with us before we get started into our presentation.
Well, thank you, Pastor Ellis. It is an honor to join you this evening. Greetings, Citadel family. I am Bianca Sadler, Vice President and Banking Center Manager of Comerica Bank. Been with Comerica for over 25 years. This May 5th, it'll be my 26th year. And I have a passion for teaching people how to navigate through their finances, how to navigate through their credit, budgeting, and certainly helping your dreams become your reality as it pertains to your finances. Jesus tells us that he would, above all, that we prosper and be in good health, even as our soul prospers. So I'm happy to join you today to teach you some very basic principles along with my colleague about credit, about finances, about budgeting, anything financial we can assist you with. Now, this is a Comerica event, but also I am an ordained elder at House of Prayer and Praise Ministries, where Pastor Stephen Bennett and Lady Ebony Bennett are our pastors, and Pastor Valerie Bennett is our pastor emerita, and been there for over 15 years doing the same thing that we're doing with you this evening. So I thank you so much for allowing us to join you tonight. Pastor Ellis, I will let you take it away.
Okay, well, thank you for that. I didn't know that was your church ministry.
Amen.
I don't want to get wordy here or long with it like a preacher, but the late Bishop Steve Bennett was trying to teach me how to play golf. You don't want to hear that whole story. I'm still out there hacking, all in the woods, and got a ball that won't go straight, and all of that. And but that was my friend, and we
Amen.
honor his memory even tonight. Brother Michael, tell us about yourself and how long you been at Comerica, and whatever you want to share with us on this evening.
Michael Cheatham. I am also a vice president and banking center manager here at Comerica. I've been at Comerica for 27 years, so I just started before Dianca did. Ironically, Dianca went to school together, so hey,
Mhm.
so that's good. It's friends in high places, right?
Right.
And so, a passion for I have a passion for financial. And one of the disclaimers I always give whenever we do financial education is that this personal finance stuff really ain't that hard. The problem is we don't get to have the conversations in our families and amongst our friends that will help us learn types of things that we need to learn and make good financial decisions.
Right.
And so what we like to do is reach out into the community and share this information in a way that's accessible, but also to let people know that the bank is not somewhere they need to be afraid of. We recognize that the bank can be intimidating. And so, you're not necessarily comfortable coming to us. We're going to come to you. And that's what we're tonight.
Mhm.
Good. Okay. Well, thank you all for that. I tell you what, help us understand. And I know you have a presentation, but I don't know how we want to. I'll flow with you all, and I'm really going to turn it over to you all. Let us, and you all can give us, tell us what we're talking about, and what the subject is, and what we want to accomplish on this evening.
Mhm.
Okay,
Who wants to
so
tackle that?
I'll start by saying that today we're going to talk about credit. And the idea is that of all of the topics that we come across in personal finance, credit tends to be the most confusing for a lot of people, but also the one that has the most impact on their lives, either positively or negatively. And so oftentimes when we come out and we're asked to speak about banking, credit is at the top of the list. That's what everybody wants to talk about. So we thought that we would give you a basic understanding of credit and how it works, and then answer some questions for you. But given, I guess, both of our wealths of experience in banking in general, Dianca and I can also field some questions about things outside of credit. So I'm
Okay.
going to share my
Click.
screen, get the PowerPoint going, and we'll click through it.
Okay. Okay. We'll go ahead and get started. Let's rock and roll, y'all.
All right. So
Okay.
the
I'll
credit
let
you
you.
deserve, you've already met
Okay.
Dianca and I, but our bios are here. And so, Pastor Ellis, if you decide that you would like to, you can feel free to share this.
Okay.
And our contact information is, as you can see, below our names here. So you can find us. And so what we like to do first is to help demystify the whole idea of credit anyway. We like to use this particular example. So me and Dianca as bankers, but today we're going to be your cousins.
Right.
And so we're going to pretend like we're at Thanksgiving dinner, and cousin Mike decides he wants to borrow $1,000 from cousin Dianca. Now, cousin Dianca is not a hater, so she's not going to say no right away. What she's going to do is ask the other cousins around the table that she knows that I borrow money from how I treated them. So she's going to ask cousin Spencer, hey, cousin Spencer, I know that cousin Mike has borrowed money from you before, and he just asked to borrow money from me. How did that go? And so cousin Spencer might say something like, well, I'm glad he came tonight. I've been looking for him. He better not let me catch him outside because he's been owing me money since last year. So cousin Dianca is going to say, mm-hmm. And she's going to draw a sad face next to cousin Spencer. Now, she might then go to our cousin Linda, who also works at Comerica Bank, and say, hey, Linda, cousin Mike asked to borrow money from me, and I know that he's borrowed money from you before. How did it go? And cousin Linda might say something like, well, cousin Mike, he told me he would pay me the money on the 25th. He paid me the money on the 25th, so we're good. So next to cousin Linda, cousin Dianca is going to write a happy face, right? So guess what? You all now know how credit reports work. It's that simple. A credit report allows somebody who's considering loaning you money to talk to other people you've already borrowed from to see how you treated them. And based on what those people have to say, that helps the new person determine whether they want to loan you money or not. So if everybody is like cousin Spencer and is mad at me because I didn't pay them on time, well, cousin Dianca is less likely to loan me the money.
Mm-hmm.
if everybody's like cousin Linda and is happy with me because I did pay them on time, cousin Dianca is more likely to loan me the money.
Right.
And that's it. Common sense.
Mm-hmm.
Yeah. So now you know how credit reports work. Now, cousin Dianca, did you have a thought on that?
No, I just don't want to have to come looking for you. That's all. So let's just
Well,
make sure we keep it that way.
well, I'm afraid of you, so I'm gonna give you your money. All right. But now you know. So as you can see, and hopefully throughout the rest of this presentation, you'll see how simple these things can be when they're presented in a way that's accessible and that makes sense.
Right.
So now you know.
Mm-hmm.
Right. So next, let's talk about why credit is so important. Now, if we were in person, what I would do is I would go around the room or around the sanctuary with my good prop, Mr. Shovel, and I would have everybody touch the shovel, right? And then I would go back to the front of the room and just scan the room to see who fainted or got electrocuted or passed out. And you know what? Every time I've done this, nobody has ever fainted, got electrocuted, or passed out because the shovel is nothing to be afraid of. A shovel won't hurt you. Well, a shovel is a tool, just like credit is a tool. It's nothing to be afraid of. Right now, I know this is a church crowd, so we're going to keep our language really nice, but I'm sure many of you have heard the term or said it yourself. I don't blank with credit, right? You can fill in the blank with whatever words you want. And they've usually said that or feel that way because they've had a negative experience with credit. And that negative experience is based on the fact that they did not know how to use the tool. So they had some hard time with it, right? So our job is to come out and teach you how to use this tool so that you don't have to be afraid of it. Think of again like the shovel. If you saw this shovel on the sidewalk, you wouldn't run away from it, right? It's not a pit bull, right? And so we are here to help you learn how to use the shovel, use the tool so that, like a shovel, it can be used to build great things. But we're also here to caution you because just like this shovel can be used to build great things, it can also be used to dig your grave.
Mm.
So it is up to you how you use it. And that's why this conversation is so important. It's so important. And the other thing we want to encourage you by telling you is that it is never too late. So whatever issues you might have had with your credit in the past, they can be fixed.
Mm-hmm.
You can improve your credit. And by learning the things that we're going to talk about today, you will be better prepared to do that.
Right.
So, cousin Bianca?
So who looks at your credit, right? That's everybody. That's anytime that you make an application for a loan, anytime you go to purchase a vehicle, anytime you apply for auto insurance, anytime and a lot of times you apply for a job. These are all folk that look at your credit history. So what have you done with what you've been given over the last 7 years? It's stewardship, right? So I wanted to just drop a couple of scriptures with you. Proverbs 1:5 says that a wise man will hear and increase learning, and a person of understanding will acquire wise counsel and the skill to steer his course wisely and lead others to the truth. So this is why we're here today. We're here to share some very basic principles as it pertains to your credit. Now, also in Proverbs 22:1, it says, a good name is better to be chosen than riches. So your credit score is your financial reputation. So Mike talked about, cousins at the Thanksgiving table, and we've all had those situations where, somebody has borrowed money, or you find out that cousin has just bought a new car, or you find out that cousin has, just bought a new pair of gaiters, or maybe she just bought a new Louis Vuitton bag, and she has yet to pay you your money. So think about approaching a creditor or a banker just like that, or why would we lend you money if you haven't paid us the money back that you owed us the first time? So that's kind of how we want to kind of think about credit. But another scripture reference that we want to make sure that we leave you with is Proverbs 22:7. And that is that the rich rule over the poor, and a borrower is servant or slave to the lender. So, one thing that your credit report shows a creditor is that you have used your credit wisely. Many of us, through college, through our individual experiences, have gotten credit cards and we knew we couldn't pay them off, had no intentions on paying them off, right? And then, we kind of struggled to get that credit back, back on track. But certainly, if we don't use the tool that we've been given, if we're not good stewards over what we've been given, even as it pertains to our credit, then what happens is it ends up costing us more. So think about it like this: the higher your credit score, the lower the amount of interest that you're going to pay. The lower your credit score, the higher the interest that you're going to pay. To the financial institution, to the banker, to the lender, to the creditor, you are a great risk, or you are a greater risk if you have a lower credit score. So we want to make sure that we keep those credit scores high, that we use that tool that we've been given, because some credit is good and credit is necessary. So we want to make sure that you utilize those tools wisely, that you utilize those tools correctly, and you don't want to be digging your own grave, because a lot of times it's real easy to to charge. It's real easy. My daughter used to say it's free money. I don't have any cash right now. Well, use your credit card. It's not free money. I've got to pay for it. In fact, I'm going to pay more for it later than I would if I had just used cash or paid it off in 30 days. So use your credit wisely. Isn't that right, Mike?
Absolutely. And you touched on a few other topics that kind of fold into this. One is, many of you all know people in your family that can't go to grandma's birthday party, right? Because grandma was nice enough to co-sign with them on a loan, a car loan or something like that, and they didn't pay it, and now grandma's on the hook for that. So as you're asking around, you want to have as many happy faces as you can, and we'll talk about why that's important. The other thing is, she touched on a fact that a lot of people don't think about when you're talking about their credit, which is how your credit can affect your ability to get a job. A lot of people don't think about that. But as I'm thinking of who I want to bring into my company, do I want somebody that has proven to be a good steward and trustworthy with money, or somebody who's been known to mess people over? And fair or not, your credit score kind of talks about you in that way. And so we want you to think again about your credit score as your financial reputation. And, we're not going to talk a whole lot about protecting your identity, except just remember that everything that a creditor needs to make a good credit decision about you is the same stuff scammers need. So you need to be careful. You need to be careful with not only who you apply for credit with, but even how you apply, because you might be dealing with a reputable company for that credit. But if you're making that credit application at McDonald's using their Wi-Fi, somebody can be pulling all of your information right out of the sky. So be careful with that. Now, going back to your financial reputation, I'm assuming that most of you that are watching this have reached a certain age, maybe have graduated from middle school. And one of the things that you learned in middle school is that people talk behind your back. Now, if that's a secret to you, I'm here to tell you, people talk behind your back. The funny thing is, credit is one of the few areas of your life where you can actually control what they say about you. And we're going to talk about that in a few slides. So our credit reports and credit scores. Went too far. Our credit reports and credit scores. So there are 3 credit reporting agencies. There's TransUnion, Equifax, and Experian. And for those of you that are a little more age experienced out there in the audience, Experian is the old TRW. And these companies collect your credit information from the people that you borrow money from. Now, for the rest of this conversation, we're going to be talking about formal credit. Formal credit. And formal credit is credit where you are dealing with a company where you're actually filling out a credit application. They're pulling your credit report, those sorts of things. So these are not when you borrow money from, cousin Jimmy or Auntie Karen. This is more formal credit. When you fill out a credit application, they're pulling your credit, you're giving your social security number, your address, and so on. Well, all of that information is collected by these three companies, and then they use that information to create this report. And that is what's known as your credit report. So like we talked about at the Thanksgiving table, how you went around the table and asked all of those people, if those were all formal creditors, all of those people would or should be on your credit report. And to some extent, those happy and sad faces, which we'll talk about in a moment.
Right.
Did you want to talk a little bit about FICO, cousin Dianca? Or would you like me to take that?
Well, you know what, cousin Mike, I'm going to let you take that. I've talked a lot.
Okay, so FICO stands for the Fair Isaac Corporation. Fair Isaac. And basically what happened is somebody whose last name was Fair and somebody whose last name was Isaac came together and created a company. And that company's main product nowadays is a credit scoring system, a computer program that takes all of that information that's on your credit reports and converts it into a score. That score is your credit score. And so this is how that works. You have your creditors. These are the people that you've borrowed money from, credit cards, car loans, mortgages, and so on. This is formal credit, right? And as I mentioned, because you all have been through middle school, they talk behind your back. And they tell your business to TransUnion, Experian, and Equifax. Those three companies then put that information through the FICO scoring system. This is that computer program we talked about. It spits out a score. But because there are three credit reporting agencies, you actually have three credit reports and three credit scores. Now, one myth that we're going to bust for you right now is that you've probably heard that you're eligible to receive one free credit report per year. That is not true. You are eligible for 3 free credit reports because there are 3 credit reporting agencies. And by law, each one of these agencies has to give you a free copy of your report once per year.
Right.
Now, we suggest that you order them in a staggered system. So you don't get them all at the beginning of the year or all in the middle of the year or all at the end of the year. You get one of them at the beginning of the year, say January, February. You get another one in the middle of the year, June, July, and then you get the third one at the end of the year, November, December. And the idea is that will help you keep an eye on your credit throughout the year. It doesn't matter which order you choose them in, but that's the way you want to go about it. Now, because you have three different credit reporting agencies, you may actually have 3 different scores, and there's a few reasons for that. The most important reason is that every creditor does not necessarily report to every credit reporting agency. Now, most large creditors, like your credit card companies, your car loan organizations, they will likely report to all 3. But some of your smaller organizations don't report to all 3. And so since your report has different information, you may have a different score. In general, though, if you have a good score with one, you should have a good score with the others, and vice versa. So let's talk about this score breakdown. Now, we're not going to spend a lot of time on this, but I want to spend time on the very first one. The most important factor in your credit score, there are 5 factors. The most important one is your payment history. That's 35% of your score. Now, your payment history refers to whether you make your payments on time. And so since we're talking about time, I want you to think of 2 clocks, CLOCKS, 2 clocks. The first clock is your actual due date. So for this example, let's assume that your due date is the 15th of the month. As long as you get your minimum payment there by the 15th of the month, you are considered to be on time and you get a happy face. That's the first clock. The second clock starts if you are a day or more late. If you are a day or more late. Now, I'm sure we got some young people on the line. And so when you're a day or more late, you're going to take your first L. For those who don't know what an L is, that is your first loss. That first loss is a late fee.
Mm-hmm.
That fee is just money you gave away. It doesn't help your score. It doesn't lower your balance. It's just money you gave away, a punishment for being late. So you might as well have just taken that money and put it right in the middle of Schoolcraft and walked away. You just gave away money. That's your first L. And that's for being a day or more late. But it does not yet affect your credit score. It does not affect your credit score until you are 30 days or more late. And because I know some of y'all are slick out there, it's 30 calendar days, not business days. So you don't get a break for holidays, you don't get a break for weekends, and you don't get a break for your birthday. It's 30 calendar days. Now, here's a very important point, and this is why we come out and do this financial education. There are a lot of people out there that think, well, I'm already late. I've already paid the late fee. What difference does it make now when I get them that payment? Well, guess what? You've already taken your first L. You've already given away money on the late fee. Don't let it get to 30 days and make it worse. So now you've given away money for the fee, plus now you've had a negative effect on your credit score. So this goes back to those happy and sad faces. Let's go back to the Thanksgiving table. Each of those happy faces helps my credit score, which is why there's a plus there. Somebody that was like cousin Linda, that was happy that I paid them on time, that shows on my credit report, and that helps my score a little bit. But everybody who's like cousin Spencer, that gave me a sad face, that really hurts my score a lot. So that's why for this graphic, you see there's many more minus signs than there are plus signs. So for every bad, sad face you get, every late payment you get, you got to have a bunch of on-time payments to offset that. Right. So I like to tell this little story that we all already know that in life, when you do what you're supposed to do, nobody really cares because you did what you were supposed to do. But when you mess up, it's a problem. And so I like to tell people this story about my mom. So my mother was a small little lady, had a nice light voice, which used to fool people into thinking that she was nice. And so my job when I was growing up was to take out the garbage. And so as long as I took out the garbage before it overflowed, nobody said anything, right? My mother wasn't like, oh, my son is so beautiful and wonderful. He took out the garbage when he's supposed to. I'm going to make him some banana pudding. Nobody cared. I took the garbage out when I was supposed to. But best believe when that garbage like started spilling over, we had a problem. So much so that when I one very warm February evening at say 1 a.m, and we all know how warm it is in February in Michigan, at about 1 o'clock, my mother came and knocked on the door. Michael, did you take out the garbage? I'm like, Mama, I'm gonna take it out tomorrow morning as soon as I get up. She said, no, you're not. You're gonna take that garbage out today. And so here I am out at 1 a.m, as cold as it was, taking the garbage out. So I want you to think about that when you think about these this paying on time. When you do what you're supposed to, it helps you a little bit. But when you don't do what you're supposed to, it really hurts you. Now, these other items here, we're not going to get into, but there's an explanation at the end of the PowerPoint. But just remember, for amounts owed, try to keep your balances low. For length of credit history, the longer you've had credit, the better your score should be, generally speaking. For credit mix, having different types of credit, whether that be credit card, car loan, and so on, is better than having all the same type of credit. So if you had a choice between a car loan, a credit card, and a mortgage versus just having all credit cards, it's better to have a better mix. So in new credit refers to things like when you apply for credit and you get what's called a credit inquiry, and we can talk a little bit more about that in the question and answer session. So as I promised at the end here at the PowerPoint, this kind of gives a breakdown of those 5 items. And it also talks about who looks at your credit score. And then finally, and most importantly, we actually have reference. The first thing I want everybody to do, since you all probably have your phones in your hand anyway, is I want you to go to annualcreditreport.com. That's annualcreditreport.com. That website was developed by the three credit reporting agencies, along with the federal government, so that borrowers would have ready access to their credit reports. And because of the pandemic, these organizations have agreed, all 3 of them have agreed to allow you to get a free credit report once a week until further notice. It was initially supposed to end in April of this year, but they've extended it because the pandemic continued to go. So you go to annualcreditreport.com and you can order any one of your free credit reports right there, and you can order them once a week from each of those agencies. Wow. And then the myfico.com is where all of this information that we presented today relative to how your credit score is determined is right there on that website. So now I think we are ready for some questions. And I
Mike,
know we
before
went that quick. Oh, go ahead, please.
I was just going to say, before we jump into the question
Mhm.
section, I just wanted to just kind of make it relevant to our audience.
Please do.
When you talked about pulling up your credit and knowing what it is that you have. Now, I know this was supposed to be credit and kind of banking 101, but Proverbs 27, I'm not exactly sure what verse it is, but it talks about knowing the condition of your flocks. So knowing the condition of your flocks just basically means know where you stand. So you need to know where you stand in terms of your credit so you don't end up paying more. I mean, how many times have you applied for a loan? You went to purchase your car, you went to purchase your home, and then it was discovered that you had some challenges. Then it was discovered that you may have had some identity theft. Then it was discovered that you may have had some issues. So it's best to know that going into it. I always encourage people before you go to apply for something major, know where you stand. The same thing holds true from a budgeting standpoint of knowing the condition of our flocks. So then it was flocks, now it's our bank account, right? I mean, how many of us have paid unnecessary fees, unnecessary overdraft fees, and different things like that because we didn't know where we stood. So that is very important. The other thing that I wanted to make sure I piggybacked on is you mentioned, not being able to go to grandma's birthday party. Now, nowadays, it's just a blessing to be able to have your grandparent, right? So I wouldn't want to be that cousin that can't go to grandma's birthday party because grandma co-signed for me. But how many of you know that the Bible really doesn't want us to co-sign for one another?
Mhm.
See, a lot of us do that. So if I'm going to do it for you, I'm just going to do it. But the Bible doesn't want us to co-sign for people. In fact, it says, I believe it's Proverbs 22:6. It says, don't be among those who strikes their hand in a pledge, among those who become a guarantee for debts, if you have nothing which to repay. Now, that's the condition. If you have nothing of which to repay. Now, and I think there's another scripture that talks about taking your bed from up under you. So unless you have the ability to pay that loan yourself, unless you have the ability to um pay that loan back yourself or buy that car yourself, please don't do that, because you don't want to be kicked out of grandma's birthday party. That's not what you want to do. And then in terms of making sure that we are able to have a good reputation, we are able to have a good name, that it's better to be chosen than riches. I want you to know that if don't bite off more than what you can chew, right? Credit sometimes, or the use of credit cards, is like when God's, is you not having the money, is God telling you not yet, right? If you have the money to pay it back in 30 days, then go ahead, pop a tag, pop your collar. But if that's not the case, you may just want to stay out of the store, because the Bible tells us that the wicked borrow and don't repay. So we don't want to be counted as one of those wicked ones. So I just wanted to make sure I kind of touch bases on those couple of things. I know I have a tendency to get going. That's because I'm a good gospel
Well,
preacher.
let me
So
jump in 1 second,
yeah,
because you said something about not co-signing.
yes.
You're talking about, I mean, I'm recommending that we don't co-sign for close family members.
Well, no,
Go ahead.
I think the spirit behind the scripture is don't strike your hand in a pledge if you don't have the means to pay.
Okay,
Because you when you co-sign, you do so with an understanding, like,
absolutely.
I know that if this person is not a good steward over this credit that I'm co-signing for, I'm going to be on the hook for it. Because if you don't pay it, now your credit is going to be adversely affected. So oftentimes we do those types of things to help our children or to help our family members, but most of the people that you're going to help in those situations are people that you would have bought them a car anyway, or you would have put that car in your name anyway. So that's that. I think that's the spirit in which it was um, intended. So the
Well,
question is, how do you get cars you co-sign off your credit it was for my children. Okay. So, well, I mean, you could call those, you could call the creditors and make arrangements. You could call those creditors and make arrangements. You could settle, right? That's still going to show up on your credit as a settled debt.
Can I add something real quick, Bianca, though?
Sure, absolutely.
Yeah. And it also, well, all right, let me go back. So when you talked about co-signing too, I think there's something in marriage that says enter into that advisedly,
That's
right?
right. Hmm.
It's the same thing when you
That's
co-sign.
right.
We're saying, okay, if you're going to do it, you better really think long and hard about it before you
Right.
do it, because
Hmm.
it can not only damage your financial relationship, it can damage your familial relationship.
You're right.
So it might be better to have somebody mad at you for a short period of time that you didn't co-sign than have
Hmm.
somebody that you're mad at for a lifetime. So just about it before you enter into it.
Right.
Point about the co-signing, depending on where they are financially, especially if the loans have gone completely bad, have them refinance that loan in their own name, which basically means they go out and get a loan to pay you back. So your name is out of that conversation now.
Right. But co-signing is still a financial obligation. So for the young lady that asked the question, how do you get cars that you co-sign for off of your credit? I mean, really, there's only two ways. You can wait it out. You can wait it out and wait for that, that Jubilee period, that every 7 years, you can wait it out, or you can make arrangements with the creditors to go ahead and pay it or settle it.
Yeah. We have another question here about how to clean up your credit.
Hmm.
So most important is get a copy of your credit report. You need to know what's on there, because you don't want to just start cleaning and not know what you're trying to clean up. You got to determine whether it's stuff you did or whether it was fraudulent.
Hmm.
And then the process, and again, that's why that annualcreditreport.com is great, because they actually walk you through the process of cleaning up your credit.
Hmm.
But the most important thing you can do is make your current payments on time. No matter what past look like, make the current credit you have, make those payments on time. And that will help you as well.
Hmm. Also, for the person who wants to clean up their credit, if there are things that are on there for longer than 7 years, you can challenge it. And if there is a debt for a company, there was a couple of times, you happen to see a Vic Tanny or something that came up on your credit. They've been out of business for several years, right?
Wow.
Big Tanny's been out of business for a great number of years. So you see that pop up on your credit, you simply challenge it, and that creditor has, I believe it's 30 days to justify it. But most of the time, I think I had something like that showed up on my credit that was from when I was in my 20s, a long time ago. That was when I was in my 20s,
Mhm.
and simply challenged it with the credit bureau, and it was off my credit in about, I would say, about a week.
Let me ask this
Mhm.
question, because
Yeah, there's some
sometimes
people out there with some Winklemans on their credit,
Yeah.
probably still too.
wow, I read something before, is if you let somebody write off the debt, but you never paid it, they can continue to put it on there.
Only if you validate
Okay.
it. Only if you validate it. So if somebody calls you about your Big Tanny's account or about your Winkleman's account, right? About your Baker's account, right? All those stores that are no longer in existence. If
Okay.
somebody calls you about that and they say, "Hey, is this Mike? Is this cousin Mike?" You say, "Who are you looking for?" Wrong number. Don't speak it to English. Well, don't lie, but just don't acknowledge that debt, because once you acknowledge it, then now that debt is reignited.
So every time you acknowledge it,
Mhm.
that clock starts over, that 7 year clock starts over.
Because that creditor has sold your credit to the next person, and then it gets sold to the next person. It gets so that $1,000 that you owe, they probably sold it to somebody for $200, right? They've already written it off, so they sold it for $200. Now the person that paid $200 is trying to get you for that 1,000. So every time you acknowledge that debt, if it's past that 7 years, if it's removed from your credit, don't acknowledge it. And
No,
every time they try to bring it back,
yeah,
it
but
again.
even if you're still in the middle of it, let's say it's a loan 2 years old,
Mm-hmm.
and they sold the debt, so now you got the new people that start hounding you. Do
Mm-hmm.
you ignore them because you still don't have the money? So I owe XYZ, they sold it to ABC. So how do you handle
Right.
that once ABC get it from XYZ, if that makes sense?
Mike, I'm gonna let you answer that question.
Don't ignore it. I was going to say, don't ignore it. And I know that probably sounds self-serving from coming from a bank, but don't ignore it because it's gonna hound you. This is
Hmm.
what I want people to think of. A lot of times when they
Okay.
think of dealing with the business, they think that the whole debt collection stuff is unfair. You know, how dare they ask me for their money back? But what I want you to think about is how many people do you know that still owe you $50 from 10, 20 years ago and you haven't forgotten it,
Mm-hmm.
right? So
Mm-hmm.
it's the same thing with business. You still owe that
Right.
money. They want to get their money. So
Mm-hmm.
if it's a newer debt, we're going to call it 2 years or so. Don't ignore it. Now, what you may be able to do is negotiate a lower payment. You can make a settlement, but don't
Right.
ignore it because they're not going to stop at least for 7 years. I
Mm-hmm.
mean, sometimes people being wealthy, right? And part of wealth is not just how much money you have, but how you feel about your life financially. And
Mm.
I don't care how much money I have. I want to be able to answer my phone. I don't want to have to worry about what's coming in the mail,
Right.
about some money I owe. And you'd be surprised, just like that person that owes you the $50, how accommodating people will be. Hey, why don't you just pay me $5 a week for the next 10 weeks, right? Any way
Mm-hmm.
to get that money. So don't ignore it. Have a conversation.
And Mike, don't ignore it. Have a conversation and let that conversation be proactive. If if you foresee that there's going to be a challenge, it is good to reach out to that mortgage company. It's good to reach out to that finance company. I had a couple of lease payments. Well, I used to do this just because I wanted to go Christmas shopping, and I didn't necessarily want to use credit, so I would use that car note money. So what I would do is I would call the finance company and say, I want to skip a payment. And they're very accommodating to allow you to do that. And what they do is if your lease or your payment is up in October, well, now your payment is up in November or December. But it's definitely it speaks to your level of integrity too when you're dealing wisely when it comes to it when it comes to your finances. We don't want to be like the person that the steward that had two talents, right? We want to be like what the person that had 10. We don't want the guy that the Lord to call us wicked and slowful, and you because if you remember the parable of the talent, the person that didn't use his talent wisely, the Lord took his talent from him and gave it to the person that used his talent, that used his talent wisely, right? So he took this little two when he gave it to the person with the 10. So that's not what we want to be. As kingdom citizens, we want to be sure that we're operating in integrity because that's where God called us to. So, so we want to make sure that we're operating in that system because when you do that, when you operate in integrity, that's a seed that you're sowing. And so what's going to come back are all positive things. You're going to get a whole lot of smiley faces. You're going to get invited to grandma's. You're going to get invited to grandma's birthday party. You're going to have the ability to sit around a Thanksgiving table and have people say good things about you. So that's what we want.
Yeah.
Okay,
Somebody
so
asked a question about filing for bankruptcy.
mm-hmm.
Go, you go. No, you go.
So after a person files for bankruptcy, how soon can they apply for a mortgage? Well, it depends on two things. Number one, have you reestablished good credit? Okay. And then the general rule of thumb, I believe, Mike, correct me if I'm wrong, I believe it's 3 years.
Yeah, I think it's 2 or 3 years. Yeah. And
Mm-hmm.
I will tell you this, that the creditor that you're considering borrowing from will tell you this up front.
Mm-hmm. Mm-hmm.
So apply for a loan, say, hey, I got a bankruptcy. How long does it have to be before you consider me?
Right. But now, if you've reestablished credit, hopefully that's good credit. You should have at least two trade lines, or at least two trade lines, and a good payment history with both of those. If you've got more than two, make sure that you have a good mix. So maybe a credit card and an auto loan or something like that. And just make sure, like he said, that you're forthright with that information. Oh.
Mm-hmm.
Well, this is a good question, Deborah Cage. Old college loans, 10 years old, how to make them go away. If they are federal student loans, a lot of people don't know this, but you will not be able to buy a home if you are in default of a federal student loan. There's no easy fix to this, right? There's no easy way to get out of it. You can wait it out. But if it's a federal student loan, it's going to hang out for a while, and if it's in default, you'll never be able to purchase a home. Now, if you have a student loan, you can always have that, as Mike said, rewritten. You can always not renegotiate it, but you can refinance it, and a lot of people have done that.
I have to jump in here 1 second because you said something that's really deep. And I need to make sure we got to understand that. Just forgive me, I may be a little slow.
No, you're fine.
You know what I'm saying?
But they don't forget either.
If you are in default with a federally funded loan, you cannot get a mortgage, or is that a mortgage through the federal government, or is that a private loan? That's where you got to help me out here.
So most most conforming loans are sold on the secondary market. So Fannie Mae, Freddie Mac. So that's federal money, right?
Okay,
if you are in default of a student loan, you are unable to come to a Comerica, where we have conforming loans that are sold on the secondary market. They're Fannie Mae or Freddie Mac money. You are unable to purchase a home. Now, you may be able to go to a hard money lender, or you may be able to go to,
well, yeah,
a private lender.
But I'm not going to any bank or credit union.
But if you go to a bank or a credit union, they're probably going to tell you no if you are in default of a federal. Right.
Oh,
right.
Which leads me to the next question, because I've heard.
I know.
Oh, okay. Wow. No, I appreciate that. I take your word for it, personally and professionally. I hear that when you file for bankruptcy, medical, I'm saying this slow, I'm starting because I want to make sure, medical and student loans are not automatically exempt or washed away, or whatever term we want to use, from bankruptcy. True or false?
You know what, Pastor, I don't want to tell you anything incorrect. I want to say student loans are exempt from bankruptcy. I want to say student loans are. Medical bills, I believe those can be expunged through a bankruptcy. Mike, jump in here and tell me if I'm incorrect.
I don't have a lot of experience with. I don't have a lot of information on bankruptcies in that way. I'm not sure.
Okay, not a problem. Another question.
Yeah, somebody mentioned they want to know about what's considered a good credit score for refinancing. So that depends on who you're borrowing from. But generally speaking, anything in the 680s, would you agree, Bianca, is pretty good?
Yeah, at least.
But some places will go lower than that, especially for mortgages, because mortgages are probably the most secure type of loan for a lender to do. So they may go lower than that, but 680 is probably the tail end of what you're going to do for traditional, better or best interest rate type of loans.
So, right. So if the higher the credit score, the lower the interest rate. So you can refinance at 680. You can get a mortgage or refinance your mortgage at a 620, actually. That's the minimum credit score in order to qualify for a mortgage. But it's just going to cost you a lot more. So if you've got a 680 credit score, your interest rate, whereas the going interest rate for perfect credit might be 2%, you might pay 4.5%. with a lower credit score. So if the higher your credit score, the lower your interest rate, and the opposite is true for a lower credit score or higher credit score.
Okay. Somebody did jump in here and said medical bills can be, so maybe they know from experience, but I was
Yeah,
just
right.
that it can be
Yeah, I think the
taken
only thing
care
that
of
can't be included on the bankruptcy are student loans.
an IRS debt, maybe.
Oh,
Listen, I'm not throwing stuff in. I don't.
right.
I'm throwing things in there. But I tell you what, thank you all for for such a wonderful. I'll tell you what, we have one more question to come in. I'll let this maybe be our last one, maybe.
Not always. The question is from Sister Sean. She says, "Do mortgage companies frown upon people who did a forbearance when trying to refinance?" I would say that depends on what the reason was.
Can you explain forbearance for us? Not to cut you off, but for those of us maybe slow. What is a
So
forbearance?
so forbearance is, it could be either with a student loan, okay, or that's when your loan is either deferred, usually deferred, or in the case of a mortgage forbearance, that means that the lender agreed to allow you to walk away from the debt. Or sometimes I believe another one is called like a deed in lieu of foreclosure. So a foreclosure or a forbearance are very similar. Am I right about that, Mike?
Yep. Yep. Mm-hmm.
Mm-hmm. So mortgage company. So here's the thing: we're all human. We all have challenges. We all have issues. Many of us have so many issues. They're alphabetized, right? So many of us have
That's
have
freaky. I
had.
like that. I'm going to use that.
So many of us, have had some challenges in the past, but does that mean that you can't get up and try again? No, absolutely not. So that's the reason why every 7 years your debt is wiped clean, and that's a biblical principle. So mortgage companies, while they may not, you may have to pay a little bit more interest, right? So you may have to pay a little bit more interest, and you 9 times out of 10 you'll just have to write a letter of explanation. Tell us about this particular thing. What happened with this? I'll give you an example. I had a situation where I purchased what I thought was a brand new condo, and the builder took our money that the banks had given them. It was as a part of their community development corporation, and the builder went and bought himself a house, or built him a house, huge beautiful home. And then he filed bankruptcy. And so at that point, you know we couldn't sell, we couldn't, nobody else could buy or anything like that. So you have to do what you have to do. And so if I chose to walk away from that situation, but it didn't negatively really impact my credit, Mike, because what I did was I continued to pay everything else on time. And when it came time for me to purchase another home, it was literally, and it was no longer on my credit. But what happened is, you have to be honest when they ask you those questions, because when you're purchasing a mortgage, they're going to ask you, are you in default of any other loan, or are you a part of any lawsuit or anything like that, in terms of any negative impacts on your credit. So if you're honest, you just have to give them a little bit of an explanation. Long answer, but hopefully that answered your question.
Mm-hmm.
Thank you all for that wonderful information. I tell you what, as we close, because it's been about an hour, and that's what we wanted to hold it to. We started about a half an hour late.
Mm-hmm.
So let me allow you all to close and tell us about, of course, Comerica, for those who may not know, for those that may be watching later, those who's watching in other parts of the country. And matter of fact, you can tell us, I know you all are in a lot of states. I don't know what all the states those are. If it's not all 50, you all can just help us out. And services you are offering, how you all can just help people.
Well, Comerica is located in Michigan, California,
Well,
Texas, and Arizona.
Mike, I think you were
and
going to say
Florida.
something.
And Florida, that's right.
Okay.
Oh,
Okay.
and Florida.
Mm-hmm.
Yep. Mm-hmm. Yep.
So what would
So
make us come to Comerica?
I would say your first and most is somebody like Dianca and I, the banking center manager, or somebody who front office of the bank, so that we can get to know you and collect some information from you. Because one of the things that customers ought to know is that you don't have a billboard over your head that says, hey, this need from the bank. So when you walk in the door, we're going to need to talk to you to gather some information so that we can offer you those products and services that are the best fit for you.
Right.
And again, that's why we come out and do what we do here. I mean, Dianca's not intimidating, I don't think. Well, until she gets mad at you. But Dianca's not intimidating. I would hope that I'm not intimidating. So don't be afraid to walk into your local bank center. Come see me and Dianca. We're very accessible. As a matter of fact, what we can do, well, you all have the PowerPoint, Pastor Spencer?
Yes,
Pastor
sir.
Ellis?
We'll post it.
And it
Yes,
has
sir.
our
We'll
contact information in it. If you feel comfortable. Yep. Okay. Good deal. Yep. And we're only a phone call or email away.
Yep. I think we have some problems, Mike, when you break it up a little bit, but thank you all for joining us, and thank you all for coming with us. Citadel, thank you all for joining. Thank you all for your patience on tonight. Citadel, let me just give you all a few announcements before I let you all go, because we have a couple of our members that lost loved ones, and we definitely want to continue to pray for them. Brother Andre Watkins, his we'll post these maybe later. The loss of his father, Deacon Andrew Watkins, whose funeral will be on this weekend. Brother John Mitchell lost of his aunt. That service will be on this weekend. Join us for 6 a.m. prayer conference call during these 21 days, Monday, Wednesday, and Friday. Thank you all, Citadel. Remember, we're online on Sundays at 9 a.m. and 11. Y'all have a blessed evening. We're going to give a big round of applause to our guests, Miss Dianca and Mr. Michael. Come on, y'all.
Bless you. Thank you.
Come on, you all. Put your hands together for them. And feel free to walk into your Comerica bank. They're all over the city. Yes, sir. And feel free to walk into your local Comerica bank and feel free to shop with them. Feel free to stop with them. They have been a blessing again, as I opened up and said, to our church and to our CDC. And we want to continue to partner with them. And we will be doing a lot more coming up in the weeks to come. Thank you all.
Thank you,
y'all have
Pastor
a good
Ellis.
evening.
God bless
And y'all
you.
be blessed.
All right.
Bye-bye.